Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, first of all, it's going to be a curtailed week this week for the trading for trading purposes. Tomorrow, of course, is Ganesh Chaturthi, and so I guess we can start by wishing everybody, because we're not going to see them tomorrow, a very happy Ganesh, and to everybody that's bringing Ganpati Bappa home, wish you all the best, and in fact, all festive greetings from us here at BQ Prime. But let's start talking about the markets. There's also the Fed to watch out for, right?
Absolutely. Fed to watch out for. And if you see Gift Nifty, that's indicating a negative start as well, right? So both these combined, it's going to be interesting to see how the truncated week also pans out in trade, because overall, if you see in terms of yesterday's last week's session, it was a good week for the markets. What's in store this week is something interesting.
In fact, I remember very clearly that you spoke to an analyst that gave you a number of 20,400 for the Nifty 50, and that was barely 2 weeks back, if I'm not mistaken, for September.
Correct. 2,400 is what Rahul Sharma of JM is clearly saying, that it's going to be the month of September where we will see those kind of levels. And that will be accompanied with a rally in large caps.
So 20,200 is what we've nearly already reached based on Friday's action, and quite a lot of action in the auto names. You've identified one of them, Bajaj Auto, very, very high volumes, and the outperform on the Nifty 50. Will that continue is the question.
Absolutely. And in fact, auto companies with ancillaries have been in focus. In fact, ancillaries as well, the PLI scheme, for supplies to EVs. So lots auguring well for them. But apart from that, it was interesting to see how HDFC Bank was in trade as well, because that is one of the stocks that people are betting big on to see that up move come in terms of Bank Nifty, as well as have its impact on Nifty as well.
Yeah, so our attention on Friday, of course, was at the banking summit at BQ Prime. And in fact, we spoke about where things will go from here on out. Some of the key highlights you will find on the website bqprime.com. But for now, let's in fact turn to what we can look for in trade today.
And overall, clearly if you see, Alex, the larger texture of the market is absolutely bullish, but there is a possibility of seeing profit booking at higher levels as well. Now, whether the F&O data actually tells you the same,
yes,
we go to Agam and get that, but that sectoral rotation is already that we've started to see in the broader markets. Though, in a temporary phase, if you go to see, it seems markets are in an overbought territory. And that's the reason why we are saying that profit booking at higher levels is something we should watch out for. And as Alex was mentioning, the US rate decision is going to be interesting.
No, certainly. And in fact, Bloomberg had an interesting report not too long back, I think over the weekend, that is talking about now murmurs from economists in the US that are saying that perhaps high interest rates would be counterproductive to bring inflation lower. So that's another narrative that is now slipped into the picture. They're saying that would have a bearing on the supply side, and the central bank would need to pay attention to that as well, saying that keeping interest rates elevated would force companies to not increase supply, and that could relate to constraining supply and keeping prices elevated.
Now, how does this all go for emerging markets? This is going to be interesting. But let's head across to Agam. Good morning, Agam. We've been looking at a market which is largely positive.
Yeah.
Though we are in an overbought zone. Yeah. And the third analogy that we're trying to figure out over here is that will we see selling at higher levels as well?
Right.
And the rally that could come in from large caps as well. What's the F&O data actually indicating to you as well?
Right,
is it a similar trend?
Right. So, it's typical that whenever we are trading at life highs, there'll always be a corner of the market calling for a sharp correction. But that's not what the options, premiums are indicating. They're indicating a sideways move. But before we move on to options, let's talk about what's happened as far as the futures go. And we really haven't had too much change in the futures either in terms of positioning, because as far as the Nifty September futures go, we have seen about a 1.2% move there in open interest, and even a smaller move as far as the Bank Nifty futures go. So there's been a little bit of uncertainty, a reluctance to take relatively larger positions as far as indices are concerned, and only time will tell if we would see a sharp price correction or a time-wise correction. But time-wise correction is what we're looking at as per the options data. Coming to that, We are at the moment looking at the maximum open interest around the 20,200 mark on the higher end and 20,000 on the lower end. As we were suggesting on Friday as well, the base is becoming a little more firm around the 20,000 mark. Moving on to the most active options too, with respect to the Nifty, we are seeing a lot more writing at the high levels around 20,200 and the 20,300. So watch out for that one. And of course, the 20,200 is where we have seen substantial amount of writing of straddles, as many may call it. It's one of the more popular, strategies where you sell the call and the put at that particular mark. Moving on to the Bank Nifty, with the range that we are keeping an eye on is the 46,500 mark on the higher end, and on the lower end, the 46,000 put is where we've seen the maximum open interest. So that's the 500 point range. Once again, very narrow, also indicated by option premiums coming through. Finally, coming down to stock futures, keeping an eye on Vodafone Idea. This has been relatively volatile. Of course, it's a relatively smaller price stock, which is why the volatility is substantial. And this time it was up around 7.8%. So we saw some amount of short covering. Bandhan Bank also saw short covering. That was up around 3.6%. And Bajaj Auto is one counter to keep an eye on, because that saw a sharp up move. It's not every day you see a 6% up move on Bajaj Auto. And we've seen near 11% increase in open interest with fresh longs there. So we'll be watching out for that one as well.
Thanks so much, Agam, for those stocks in particular. Bajaj Auto is one to watch and trade today as well. Moving on, though, to the steel space, and Tata Steel is probably going to be a stock to watch as well today, based on the update that is coming from the UK. We've spoken about it in the past weeks that something is brewing with regard to Port Talbot. They have announced that there is that improvement in technology investment, both by the UK as well as Tata.
And with that, you have the metal pack that has been in focus as well. The kind of interest that it's generated, it's interesting, and how higher raw material prices could then dampen the sentiment in the second half, right?
No, certainly.
So it's going to be interesting to watch out the entire gamut now.
But let's take a look at this deal and what it means for Tata Steel. From our perspective, of course, that's what we're looking at. Globally, I think the narrative has to do with what the UK is doing in order to keep steel makers and to keep companies in the UK. But Rishi is joining in to give us some perspective on what it means for Tata Steel. What is the investment that is likely? I believe the UK is putting in 500 million pounds.
Yeah. So the total deal value is about 1.25 billion pounds. Of that, UK government is giving a grant of about 500 million pounds, and then Tata Steel is going to be filling up the rest of the 750 million pounds. Now, this is for setting up an electric arc furnace, which is a much more greener version compared to the traditionally used blast furnace that is currently under operation in Tata Steel. Now, this EAF will be operational within the next 3 years, and during the transition period, the company has said that it will import some of the products in order to continue the downstream business. Now, the UK is a major exporter of scrap steel, and EAF very efficiently uses scrap steel, and the government is planning to leverage that benefit with respect to the UK's market. Apart from that, there are some media reports that this shift to EAF will lead to quite a lot of job losses, because EAF is again something that is more technologically intensive and uses much less labor. According to some media reports, it's about 3,000 of the 4,000 employees in Port Talbot will probably be unemployed. So there may be some resistance that Tata Steel may face as it goes ahead with consultation with the unions. Now, with regards to the greener steel aspect, it is important with respect to Tata Steel, because there has been higher and higher focus in the EU, particularly in the EU, with especially the carbon border adjustment mechanism also coming into play very soon. So the intensity will fall by about 81% in for Tata Steel UK to 0.4 tons of carbon dioxide per ton of steel that is produced. With regards to the financial impact, the company estimates about 151 to 175 pounds per ton of cost savings. Now, this investment is necessary to replace some of the end-of-life assets that are currently under operation. So it will also help for the company to convert some of its current losses into possible profits in the long term. Now, according to the analyst views, there is Morgan Stanley that came out with a note, and it was quite positive, because again, this investment was something that was long awaited, and it was a key overhang. So it was positive with regards to Morgan Stanley, but a stark context with regards to Jeffries that was saying that it is actually a missed opportunity for Tata Steel to have stopped maybe high versus UK business because it was a high cost, low margin geography is how Jeffries was terming it. So quite stark context, but overall other brokerages were also quite positive on this because it was something that was long awaited. But again, the company said it will come out with more details after the Q2 results come.
Incrementally, it sounds interesting because it has been pointed out, like you're saying, that this is a space which is very low margin. But then if efficacy of the production is improving and there is cost saving per ton, then one would assume that those metrics improve in favor of Tata Steel.
Yeah, I think we just need to look
at the
how
numbers.
It performs within
At the
And
numbers.
then how the stock reacts in trade today as well, with the kind of up move we've already seen in metal stocks. But yes, it has the potential to be one of the stocks of the day, at least from the large cap space as well. So watch out for Tata Steel pretty closely in trade. But moving on, defense continues to remain in focus, and this is mainly on the way the government order inflow has been panning out as well. 45,000 odd crores is what we are watching out for, Alex. And I think it's busy for Saloni as well to keep tracking which companies will remain in focus and could be potential gainers on the back of this 45,000 odd crore order that has the defense equipment procurement budget that has been announced.
Right. So on Friday, in a significant development for the India's defense sector, the Defense Acquisition Council gave the green light to 9 capital acquisition proposals, totaling approximately 45,000 crore rupees. So these procurements will be exclusively sourced from Indian vendors, which will fall under the buy category, and thus providing a substantial boost to the Indian defense industry and aligning with the Atmanirbhar Bharat initiative. Now, speaking of the specifics of these acquisitions, so in order to enhance protection, mobility, attack capability, and increase survivability of mechanized forces, the DSA approved the acquisition of light armored multi-purpose vehicles and integrated surveillance and targeting systems. Additionally, there was also a nod towards the procurement of high mobility vehicle and gun towing vehicles. Of these, the contractors for the light armored multi-purpose vehicles are Tata Motors and Bharat Forge. For the Indian Navy, the DSE also approved procurement of next generation survey vessels, which will be made by the joint venture of Garden Reach Shipbuilders and L&T. The Indian Air Force's proposals have also secured the DAC's approval. These include the avionic upgrade of Dornier aircraft to enhance accuracy and reliability in operations. Moreover, the procurement of Dhruvastra short-range air-to-surface missiles, which will be supplied by Bharat Dynamics. The DSC has also accorded approval for the procurement of 12 Su-30 MKI aircrafts, along with associated equipment from Hindustan Aeronautics. So the defense minister emphasized the need to elevate ambitions towards indigenization by stating that rather than having a threshold of 50% indigenized content, that the aim should be towards a minimum of 60 to 65%. This directive underscores the government's commitment to strengthening India's self-reliance in defense production.
Oh, certainly. Thank you so much, Saloni, for that update. The last one has to do with Sukhois, of course, and SU is the abbreviated form of that. Saloni, thanks so much for bringing us
with these names as well, Alex, it's going to be interesting because these are potential companies. These are the ones who've supplied all of this in the past, right? Now, if there is any further development with any other competitors or peers, the order could be divided as well. Like, say, for example, we're talking about Garden Reach, who's in JB with L&T. There could be other shipbuilding companies also that could remain in focus on the back of this, who could be potential winners of the same.
Yeah, so the bidding process happens in L1, L2, and the L2 gets an opportunity to match, and so then it gets split. That's usually how it works. And in fact, a lot of these companies have also said that while the opportunity is humongous, it takes a little time for these orders to pan out. It's not that it's announced today. And this, of course, is an acceptance of necessity, which is essentially the budget being set aside. But then you have the tender process and all of that takes place. So it will take a little time for all of this to pan out. I believe we're going to take a check on Dabur next. And this is interesting because there was an analyst meet and there were several updates with regard to the revenue projections by the company. If you look at each of its different verticals, and we've got Sesa joining in to give us some perspective on what the latest there is. Morning, Sesa. What are you picking up?
Hi, morning, Alex. So, Dabur did organize a capital market day to share its strategy and fresh developments in its business segment. So, they have, stressed on the key strategic initiatives undertaken under CEO Mohit Malhotra's leadership since FY19, which led to a jump in Dabur's portfolio penetration to 76% in FY23 from 69% in FY19. The company's sales also increased by about 8% between FY19 and FY23 versus 2.2% over FY15 to FY19. Now, going forward, the company has set ambitious goals for each of the segments. In the healthcare business, it targets to reach a revenue mark of 5,000 crore in the next 5 years. As for the home and personal care segment, the management aims to achieve a revenue of 7,000 crore in the medium term, while it expects to double its revenues to 5,000 crore in the food and beverage business over the next 5 years. Now, some of the other key areas where the company is working are, it is repositioning its core brands for India's young generation, scaling up its power brand portfolio, expanding distribution, and enhancing their relevance through the modern formats. The company is also focusing on expanding its presence in the existing categories and venturing into adjacent markets like therapeutics, baby care, hair oils, toothpaste, and even tea. Now, according to Bloomberg data, 30 out of 46 analysts recommend a buy rating on the stock on the back of the healthy growth outlook. However, there are a few downside risks, and these include a persistent and intensified rural slowdown given Dabur's high exposure to rural markets, a spike in material cost pressures, which could possibly lead to a reversal in the market share gains.
Thanks, Aisa, for getting us the details. And FMCG has been one of the segments which has been slightly under pressure. Plus, the way the rainfall pans out is going to be interesting to watch out for from an impact perspective, as well as the way pulse prices are panning out as well, because you're seeing that the government is trying to control, especially in terms of rice exports or wheat exports. So that's going to be with regards to FMCG. But moving on, a whole host of stocks that continue to remain in focus on the back of order wins. Varsha is standing by to get us more. Varsha, what do you have for us? Because lots of companies that could be potential order winners or already have bagged orders.
Yes, so few companies that one should look out. So first one is Bharat Electronics. Now, company has received an order of 2,118 crore from Cochin Shipyard Limited for supply for various equipments consisting of sensors and fire control systems for Indian Navy. Now, the company has also received additional orders worth rupees 886 crores, and the said order is for update of Akash missiles for RF seekers with accessories and spares. Now, with this, company has in all received orders worth rupees 14,384 crores till now in the financial year 2023 and 24. Then we have WPIL Limited, which has received a contract for supply of onboard range of centrifugal pumps and spares for different classes of ships from Ministry of Defense. Now, the order value is almost for 14.3 crores. Now, this contract will strengthen WPL product offering to the Indian Navy, which is undergoing a major fleet expansion program. Now, this was already highlighted in the June con call for the company, so they've already given a hint regarding this order. Now, the next we have HFCL, which specializes in crafting optical fiber cables, has secured the order aggregating to rupees 1,015 crores from Madhya Pradesh Jal Nigam. Now, this order encompasses for providing EPC services, including provision for laying of optical fiber cables on critical and important routes for the execution of multi-village drinking water supply network in Madhya Pradesh. Now, the installation of optical fiber in these areas will also enhance operation and maintenance of the network. This project will be executed by the company in collaboration with Khilari Infrastructure Private Limited, and also this must be completed within 24 months from the date of order. Now, with this, the HFCL's recent conference call unveiled an order book worth rupees 6,585 crore. Then we have, one should also look out for pipe stocks, because now Maharashtra government on Saturday decided to grant 46,000 crores for developmental works in Marathwada, as it announced a series of irrigation and other projects in the drought-prone region. Now, additionally, revised administrative approvals for irrigation projects of 14,000 crore was also announced. Now, the regions which they have covered is, you have got Aurangabad, then Dharashiv, which was earlier called as Osmanabad, then Jalna, Beed, Hingoli and Parbhani. Now, this paves the way for bringing 8 lakh hectares of land under irrigation.
Okay, interesting. There are also several other updates, and I think one of them is a story in the Economic Times that relates to Torrent and its acquisition or aim to acquire Cipla. That news seems to be gathering momentum because they seem to be looking to tie up funding for that. You have updates on that as well as a few other stocks.
Yeah, so a few other stocks that one should watch out for is first is Adani Energy Solutions, where the promoters of Adani Energy Solutions have raised stake in the company from 70.41% to 72.56% between August 16 and September 14 as per BSE filing. Now, the filing stated that promoter might have bought nearly 2.4 crore shares during this period. The promoter holding at the end of the quarter June ended was at 68.28% as per the shareholding data. Also, Gelt Berry Trade and Investment Limited, one of the promoters group, informed about raising 2.5% stake in the company. Then we have Texmaco Rail and Engineering, where the board of directors on Friday approved plans to raise 1,000 crores by issuing equity shares through QIP, and the company also said that it is issuing 33,78,375 equity shares to promoter and promoter group for amount not exceeding 50 crores. Also, this includes 40 crore from Advance Finance Private Limited and 10 crore from Saroj Kumar Poddar, who is the chairman of Texmaco Rail Engineering. Now, the promoter holding for the company was at 58.70% as of quarter ended June 2023, with Indian Railway looking to double the freight capacity to reach 3,000 million tons by 2027. Company has already entered into strategic alliance with Hindalco to manufacture aluminium rail wagons and coaches. Now, the company has an order book of around 8,000 crore, of which rolling stock comprises 5,400 crore. Then lastly, we have an update on L&T, where the buyback. So L&T announced buyback on 25th of July, and a lot of updates have been given by the company. So the buyback opens on September 18, which is today, and it closes on September 25. Now, the offer price has been updated to 3,200. Now, this is 10.1% premium to the Friday's closing price. Also, the stock has run up over 13% since announcement of buyback. So a lot of positive momentum regarding the stock.
Watch out for L&T pretty closely. And as Alex was mentioning, you have a Torrent Pharma also that will be in focus, because we've been looking at Torrent and Dr. Reddy's in partnership with a lot of other, PE investors who would probably look at buying the stake in Cipla. Now, news reports are suggesting that they are in advanced negotiations with CVC Capital Partners, and they will be forming a consortium to raise at least around $1.2 to $1.5 billion from the European buyout fund, as the conglomerate puts together a 60,000 crore, which is a $7 billion acquisition financing package. And this is going to be one of the largest in the history of the healthcare industry, Alex. So talks are brewing. How fast they fructify is going to be interesting to watch out for, whether it's going to be a combination of Torrent and Cipla or a Dr. Reddy's and Cipla.
Yeah, certainly. And I will point to a recent conversation that we had with a pharmaceutical analyst. And
Purvi Shah, we
Purvi.
spoke to, and that time Monal actually laid out all the details as well to us in terms of what would it mean for that conglomerate to be either with a Dr. Reddy's or with a Torrent.
And so perhaps we'll get our social media team to post a link in the comment section so that you guys can check it out down the line. But for now, let's turn to action from the primary markets. And there's quite a lot to talk about in trade today, of course, because this space has been very active. Himansh is joining in with the latest updates here. Himansh, a couple of updates at the very least. Yatra is one of them.
Yeah, absolutely. So Yatra being one of the issues that are expected to close later this week. But more importantly, we have Jupiter Lifeline Hospitals that is set to list on the exchanges today. And it's both going to be listed on NSE and BSE. The issue was subscribed 63.72 times as of day 3. And QIBs, which came in on the very last day, were subscribing to a strong 187 times, which was primarily led by the domestic financial institutions. The multi-speciality healthcare provider, which is set up in Thane, Pune, and Indore, has cumulatively raised about 870 crores from this IPO. It plans to pare down debt by allocating 460 crores for this purpose. Then we have Sami Hotels and Zagil Prepaid Ocean Services. their offers closed today. Hence, we might see an influx of institutional investors, which generally come in on day 3. Then Yatra, speaking of Yatra Online, the offer is set to close on Wednesday, September 20, and it has so far been subscribed by 0.1 times so far, with retail investors subscribing to almost half of it, half of the reserve portion. Then overall, speaking about the general IPO landscape this week, we have over 2,000 crores worth of IPOs that are lined up, which comprise of 3 main board public issues. Sai Silks and Signature Global are set to open their offers on Wednesday. So Wednesday, midweek, this is going to be a key to watch out for. Now, just coming up to the subscription update for Sami Hotels, it's been subscribed 13%, with retail investors subscribing to 58% of the reserved amount. And lastly, we have Zaggle Prepaid, which is subscribed 0.43 times, and retail investors have already subscribed to almost 2 times of the reserve portion.
Interest in terms of Zaggle, as we were talking about as well, that is there. So I think it's an action-packed September in terms of primary markets. I think last week you did tell us as well, 10,000 crore worth of IPOs is what we're looking at in the month of September. Thank you, Himansh, for getting us the details. I think, our focus is going to be divided between the secondary and the primary markets, Alex, and it's going to be interesting.
You strike the iron when it's hot. So when the markets are hitting all-time highs, that's the best time to raise funds.
Absolutely. And I think a couple of stocks that we've mentioned as well. So watch out for the metal pack pretty closely in trade today. That's all that we have on this session. Thanks for watching, and lots more lined up on BQ Prime. Please stay tuned.